So, what do you recommend for entrepreneurs, especially if they're just starting out? But maybe it doesn't really even matter if they're just starting out. How can they start, I guess, having the right mindset on finances and making sure that they're structuring their business in such a way that it's not going to bankrupt them and that they're going to grow?
Well, here's one of the things that with entrepreneurs, and this kind of applies to everybody, and it is expect the unexpected. So many times we think that life is just going to be, we're going to have sunshine all day, all the time.
I want
we
that.
know, right? Yes, me too. But we know there's come a time, rainy days, the valleys come, and many times we just say it can't happen to us. COVID taught us that.
Well, welcome back to the Professional Rule Breaker Show. I am super excited to be here today because I have an amazing guest. But before we go into my guest, I just want to make sure that you don't miss out on any of our podcasts because we provide so much good information from my amazing guests that I know will help you in the business. So again, make sure you hit the subscribe button. So as far as today goes, the individual that I have joining us, he is the host of Troy Talks podcast. He's also the Chief Encouragement Officer, which I love that title, of Troy Holt Consulting, LLC. It's a financial consulting company that focuses on empowering and educating individuals and small business owners on wealth accumulation, preservation, and debt elimination. And who doesn't want to know about all of that?
No, right?
Yeah. And he is an engaging and motivating speaker and a mentor, and he loves to share his personal stories and expertise to inspire others. And his mission is to eliminate financial illiteracy. So I want to have a really big welcome to my friend, Troy Holt.
Kathy, who was that you was just introducing? You sure that was me?
Yep, it was you. It was you. It's impressive, isn't it?
Yes, thank you. Thank you for that warm and gracious introduction. And first of all, I want to say thank you for allowing me to be a part of your show, your network, your audience. I'm truly honored to be here. And I just want to say thank you. And those that are listening, make sure you follow Kathy's podcast and make sure she's great. So I'm glad to be here.
Oh, you're making me blush. So thank you. I appreciate it. So the topic of what we're going to talk about today is something I think probably everybody, whether you're an entrepreneur or you work for a company, or if you just are stay at home, I think it's something that everyone is interested in and everyone needs to know about.
Correct.
Finances and debt elimination, and of course, how to accumulate wealth. So tell me a little bit about what it is that you do.
Yeah, so the main thing is I try to help. My biggest thing is education. In America, they said about 30% of the people, this is international, 30% of the people are financial illiterate. They've given simple quizzes and only 30% are financial literate. There was a video was done where they was on a college campus and they was asking people questions and they couldn't tell them, their interest rates, on their credit cards. They couldn't tell them they would ask the simple questions, but you ask them about Taylor Swift, you ask them about Ludacris or they could tell you all about that. And it was interesting that we put so much focus on things like that. And so what I try to do is, first of all, is to educate people, and we'll start with the 7 money milestone. Now, this is the individual. Business is a little bit different, but if it's individual, we'll start the 7 money milestones. And milestone number 1 is a financial education, and a person can do that reading, YouTube. Be careful because there's a lot of misinformation out there, but it's also getting with the financial profession. Number 2 milestone is for a person to proper protection, that is protecting their family in the event of disability or death. They cover that. Number 3 is having a emergency fund. The transmission will fall out.
Right.
Yeah,
something blows up.
Yeah. and in America, they said only, I think the number is 39% in America only have $400, enough to cover $400 emergency. So the rest is really, in a tough position. Number 5 is cash flow, certain ways to generate cash flow. Then number 6, then we get into building the wealth. And then number 7 is protecting the wealth. Protecting the wealth, things like trust and wills. If you go back just recently, Bozeman, Chadwick Boseman, Aretha Franklin, Prince, all of those did not have estate planning. They were multimillionaires, but didn't have estate planning. And then that's more money, more time, and
it's
money.
Just insane, isn't it? Because they had the resources. So
they did, correct. They definitely had the resources.
Should have had that, right?
And I think there's 2 parts. I think two parts that have fault with that. The people who are around them that was managing their affairs, and then also the person themselves, because somebody should have been there and said, hey, look, we need to get this estate plan in place, and push that. And they could have, and they just put it out. But I think those 2 are at fault. But that's what I do. Help educate people on those things, and then give them a plan to arrive there.
So are there simple steps that people can take? I mean, what would be the first few steps that people should take if they realize that they're not financially literate?
First of all, I would, like I said, YouTube, Google, books. There's a lot of information out there, but like I said, there's misinformation out there, but you can find some good, solid information. What you will find many times, you'll find people that are biased to a particular strategy or products. And what happens is those people go to the extremes. Never do this, always do this. And my philosophy is, it's like building a house. Everything is a tool. And you building a house, your goal is to build this house. That's the ultimate goal. And you may have a hot hammer, you may have a saw, you may have a drill. Each one is a tool. It's not that one tool is better than the other. Each one has a particular function. So that's how I look at different financial products and strategies. It could be a certain time period, certain time that this particular product is good and certain time is not. And so people go to the extremes and they put everybody in a box. And so that's the danger you have. But simple things, YouTube, reading. One tip I would say, starting out. Many people don't do this. This is something that everybody can start. Simple. The first thing you want to do is pay yourself first.
Ooh, I like that.
Most people don't. So what they do is they get their money, the cash, and then they pay all their bills, and then they take what's left over. Now, me being a man of faith, I'm going to take God's portion out first, and then I'm going to pay myself. But pay yourself first. Now, somebody might say, Kathy, well, how much should I pay myself? That doesn't even matter. It could be $1, it could be 1%, it could be 2%, it could be $20. The key is the mindset and the discipline. By you starting small, eventually you can work your way up. Because if you can't put aside $10, you definitely can't put aside 100.
Right.
So simple step, paying themselves first.
So that kind of applies to business too, don't you think? Like, let's say you have an entrepreneur and they have a business, and even like these, bigger companies.
Yeah.
that, a lot of times entrepreneurs, they're putting everything that they have into the business.
True.
And they put themselves last as far as
Yeah.
paying themselves, as far as taking care of themselves, you name it.
Yeah.
Because entrepreneurship is really, it's like a 24-hour a
It
day
is. Right.
job,
Yeah.
right? So what do you recommend for entrepreneurs, especially if they're just starting out, but maybe it doesn't really even matter if they're just starting out. How can they start, I guess, having the right mindset on finances and making sure that they're structuring their business in such a way
Hmm.
that it's not going to bankrupt them and that they're going to grow?
Well, here's one of the things that with entrepreneurs, and this kind of applies to everybody, and it is expect the unexpected.
Mm-hmm.
So many times we think that life is just going to be, we're going to have sunshine all day, all time.
I
And
want
we know,
that.
right? Yes, me too. But we know there's come a time, rainy days or valleys come.
Mm-hmm.
And many times we don't, we just say it can't happen to us. COVID taught us that. This was something even beyond our control. It taught us, expect the unexpected. So one of the things, especially with entrepreneurs, here's my question for just one question. So what happens if you have a car accident and you can't generate the income because you had a car accident? It wasn't your fault. It was something that you could control, and somebody hit you, and so now you're out, and you've got to go to physical therapy, and you got this hospital bills. How do you plan to survive? What do you have in place? So there's a certain thing is sickness or accident, disability insurance that a person unexpected. Now, there's many factors, affordability, disability, they have to be underwritten. And there's a lot of factors in there, but let's consider that. But also, some businesses are brick and mortars where they have rent, they have salaries, they have utilities. There's something called BOE, business overhead expense. It's another form of disability. So the one pays you your salary, the other one covers the expenses to run the business. That's just, one thing that, I can think of that a business owner should consider and look at, especially if they have the budget and also if they have the health, because disability underwriting is more stricter than a life insurance policy. Mm-hmm. So they want to make sure that they have one thing in place to cover that. And we're more likely to have a disability than we are. We're going to die once, but we're more likely to have a disability or multiple disabilities. When COVID came, whenever a person got COVID, you had to be out quarantined for 2 weeks.
Right.
My wife and I, thank God we got it at the same time. So we'd have been 4 weeks where we would have to quarantine because we was around each other. So we got it at the same time.
So it's really like planning for all the contingencies out there,
correct,
right? The
correct.
things that can happen that are unexpected.
Correct.
Yeah, because that COVID did teach us a lot.
Yeah, it did.
It was really unexpected for the most part.
Right.
The lockdown and the length of the lockdown and all of that. And so that's, I guess, a big highlight on why we should all have either an emergency fund or something. I actually call it in our family contingency fund.
I've heard that term used too, contingency fund. Yes.
Yeah. So how do you protect like your business then? Is it through like the contingency plans and protect your employees and all of that? Let's say if something was to happen.
Mm-hmm. Well, one of the things is there's different type of, because whenever you purchasing any type of insurance, you're transferring the risk. So there's a risk. So there's a number of things you can do. Number one, you could mitigate the risk That is, you could do whatever you can to lessen the risk. Let's say driving. So instead of you say, hey, I don't want to cover myself with auto insurance, so I just don't drive. Or that's basically eliminating the risk. But mitigating, let's say you only drive in the daytime 2 hours, so you lessen the risk. And then when a purchase insurance, they're transferring the risk. They're saying, hey, there's a risk there. I don't want to assume it, so I want you to assume it. And by them taking on the risk, the insurance company, you pay a fee for them. That's your premium to assume the risk. So people need to, if you have a brick and mortar, you may have to have what they call if someone get hurt at your business, making sure. And all this is not my lane for this, but making sure your business is structured properly. If it's a corporation, LLC, make sure it's structured properly, because you want to also protect yourself from lawsuits. But also, if something happened to you, protecting yourself from those different things. And so it's good to sit down with professionals and have those things set up to make sure that, you're covered. And I know we can't cover everything, especially if we don't have unlimited pot of money.
Because it gets really expensive.
Yeah, it gets expensive. You're right. Yeah. And so, but I think, a person need to sit down, be aware of those things, and try to mitigate those risks and lessen those risks as much as possible.
It sounds like really what you need to do in business is, on the financial side, you have to make time to plan.
Correct.
And when you plan, you can plan like your wealth accumulation. You can plan how you're protected, your business is protected, and like probably even a lot more than that as well. How not to have debt.
Correct. Well, to that point, Kathy, a business owner needs to, what is their exit strategy? How are they going to get out? Now, what if they have partners? What happens if one of the partners dies? Who gets the business? How do they get the business? All those are things that can be worked out, and with things like buy-sell agreements, different things like that. If you have somebody, what if you have a person who's valuable to you, key man? How do you cover that? So there's different things that business owners can look at to help if those things happen, that they won't be in a bind.
Oh yeah, absolutely. I had interviewed somebody, quite some time ago, and he had mentioned also to make sure that you have, in the planning stages, to make sure that you also have like the logins and passwords of things. Like, for example, if somebody dies, and you don't have that information, it's really hard to get in there. And let's say it's somebody that takes care of your marketing or even your finances, and then all of a sudden something happens to that person. And poof, you're in a bunch of trouble.
It sure is. One thing I did for me, for my wife, I have a little safety deposit box at the house. And so I typed up everything, like insurance policies, the phone numbers, the policy numbers, all that. So something happened to me, she can go in there and go through it, because I know she's going to be a mess. Now me, I'm able to still function if something happened to her, but I know with her, she's just going to be a mess. So I got it set up where she'll know where to go and what to do. So we should do, for business owners and for our spouses. So if something happened, they know where everything is.
Oh, absolutely. Absolutely. So I heard you talking about the rule of 72. So tell me about that.
Yeah. So the rule of 72, it's a great rule, and most people don't know about it. So what it is, it's basically a math equation. So you take whatever number interest rate you're getting. So let's say you're getting a 4% interest rate on a savings account. Okay. You divide that by 72, and that answer you get will tell you how long it takes for your money to double.
Oh.
So 6%, if you're getting 6%, you divide it by 72, it'll take 12 years for your money to double. If you get in 12% and you divide it by 72, it takes 6 years for your money to double.
Wow. I didn't know that. I'm gonna do some math tonight, I think.
Yes. Now, but also, Kathy, that works on the negative. Take what you're paying credit card interest rate, divided by 72, and that's how long it takes that credit card company for their money to double.
Oh, wow.
Yeah.
Now that's a scary thing.
Yes.
And probably
yes.
it would be eye-opening for a lot of people.
Yes, it really will when they start looking at, oh, they money get doubled because the average credit card rate, I think, is 17%. The numbers, I think, is 4.9%. I think it is somewhere on there for a credit card company or bank, whatever it is, for their money to double. And then with us, like a savings account now is getting 0.09% is the average. Larger, bigger banks is 0.01%. So it would take 800 years for the money to double. And so this is what we talk about. We educate people on the rule of 72, these things. And then what it is we're getting you to understand how it works. And there are ways to get a better rate. But we want to educate you to let you know, and the eye opener. You mean, oh, okay, my money is on my credit card is taking 2 to 4 years to double, and then it's going to take 15, 20 years. Yes, because it's designed for the banks to make the money.
Wow. Actually, I mean, yeah, I'm like I said, it's good to be able to do that math and know how to do that. So let's talk about, debt elimination.
Mm-hmm.
So when you figure out, because I don't know, most credit cards are probably what percentage? 18%?
Yeah, 17, 18%.
I'm not really sure.
Correct.
And if you were to take that and divide by 72, that would tell you how long it would take for you to pay off your debt or something like that?
No, the rule of 72 just basically is giving you whatever interest rate you're paying or receive, and how long.
Oh, how long it'll take for them to double their money.
Right, their money would double. Okay. And then if you're saving, how long it would take your money to double. So that's what the rule of 72 covers. Debt elimination is a little bit more complex, but we can show it's I don't want to oversimplify, but we can show how we can show somebody to get out of debt, including the mortgage, in about 7 to 9 years without changing what they're doing.
Oh, it's a strategy. You need to tell us about that then.
It is a strategy.
Spill your secrets.
So I don't want to oversimplify, but basically how it works is you use an insurance policy to accumulate cash.
Okay.
With the insurance policy,
like a universal, are you talking like a universal life or something?
You could use universal life, but for you have also what they call the infinite banking strategy, and that strategy uses a whole life policy. Okay. And basically, how it works, you max fund the policy, and the money in it is compounding, it's growing, and then at a certain time you're taking that money and then you're paying off the debt, with the snowball effect or either the avalanche, and is allowing your money is still compounding because you're borrowing money from your policy. But when you borrow the money from the policy, you're not actually borrowing your cash. You're borrowing the money from the insurance company. Your cash is the collateral. Okay. So your money continues to grow and compound because it's still in there. And then you're just taking a loan out on your money and taking and paying off all the debt, and then you get out of debt, and the numbers are running. We can plug the numbers in there and show you if you do this, how long it would take. If you put more, it'd be quicker, but 7 to 9 years is about average. But there's a lot of factors in that because you're using an insurance policy. Can the person get approved for the insurance policy? Right. Is one hurdle you gotta, and then also, does the person have the budget? If a person is young, then with the insurance, the cost is going to be less. It's older, if you're my age, and then I have type 2 diabetes and I have sleep apnea. So for me, anytime I do a policy, it's automatically 25% more because I have a health condition. Right. Yeah. Wow.
So I think if anybody's interested in that, they're going to have to get in touch with you
Yeah, because like I
so that you
said,
can explain it
I can
even
explain it. Yeah, because we
a
do
little bit more than that. Yeah.
yeah, we do a needs analysis and sit down, and nothing is never forced or pressured. But I sit down and I want to ask a lot of questions, find out about them, what they want to accomplish. Then I have to look at the budget. So it's a lot of factors in there.
Okay. So let me ask you this.
Mhm.
What are the biggest mistakes that you see people do with their finances?
There's numerous one, but one, as I said earlier, they don't pay themselves first. Number two, they don't track their
Okay.
money. And,
So
and
let's
that's
like,
that's I remember say 2020, maybe 2021, I think it was. So I have tracking apps, but I just wasn't paying attention to it. So there's an free app called Mint. It's
okay.
free. You can track. So for those that are listening, I don't get anything. I'm not associated with it, but it's a good app that you can track your finances and you can connect your accounts.
Okay.
So it'll automatically sync. But anyway, November of I think it was 2020 or 2021. I think it was 2020. Yeah, 2021. I ended up looking at my spending, and it was just me and my wife, and we spent $1,200 on food
Ooh. In a month?
in a month.
Oh, wow.
Yes. And now you gotta. There was a number of things going on. There was, just groceries, door dashing. Because remember, we still in
Because
pandemic.
it was COVID, so you
Yeah,
couldn't
right.
go
Yeah,
pick things up. Yes.
and then it was Thanksgiving.
Mm.
So that whole month, I'm like, oh well, this right here is ridiculous. It's what's easy to not track it, not keep up with it, and if you don't, so that's another thing, mistake I see people make. So you have to track it, and sometimes I get off, I had to get back. Oh, I got to need to make sure I stay on top of it and track it. But that's one big thing. Track it.
Yeah, tracking the spending. The
Yeah,
other thing too, sometimes, what about like tracking your investments? Because I think sometimes you get really, really busy, right?
yeah, yeah,
And then you haven't looked at something for a really long time. Now, I'm
yeah,
not saying like look at it every single day, but let's say a long time goes by and then you go and you look and you're like, oh, what happened?
yeah. Well, the old saying is, inspect what you expect. I think that's how it goes.
Okay.
So it's another thing you have to track. You have to stay up on top of it and see what it's doing. But now I don't have securities license anymore. I used to. But what many people do, they panic during crisis, and they start making decisions emotionally. And remember, if you're in the market, you're in it for the long term, not the short term. And so people have to realize that you can't make decisions based off of your emotions. You have to really think logically and make wise decisions, and don't let fear and panic. And sometimes the media, could put a lot of panic out there. But would be aware. I mean, don't bury your hand in the sand. Just be aware and stay on top of it. Just my recommendation.
Okay. Yeah, no, I think that's good. I think that's actually a really valid point is
Mhm.
to track
Yeah,
because you don't know what you don't know.
correct.
And exactly, just even like the spending, but you could
Yeah,
do that in your business too. So the
correct.
example that you gave was tracking your food,
Mhm.
but maybe in your business, it's looking at, I don't know, all the software that you're buying
Correct.
or, what you're paying for outsourcing or
Correct.
all sorts of other things that if you don't like keep track of it. Because I
You're
know
right.
sometimes too, especially in the business world,
Mhm.
you can be paying for stuff that you're not using
True.
anymore.
True.
And
True.
that a lot of that stuff can be really expensive
Right. Yep.
and then it's not being used.
Correct.
Or if you buy like so many licenses to
Mhm.
something like some software or whatever, and yet you have two people
Right.
using it and you have a license for 20 or something
Yeah.
like that. So it's really important, I think, to
It
be able to
is.
keep track of all of that.
Yeah.
So
I mean, you should evaluate it and stay on top of it. And maybe monthly or quarterly, really look at it and see: do I need all these licenses? Do I need all this? Because sometimes life get us, we get busy and we don't really look at what we're spending our money on, and we could shave and cut back if we just really sit down and analyze it and see where things we don't need.
Mm-hmm. A friend of mine who's a big operational guy, he says that one of the things that you should be doing every day is ask yourself the question of, okay, what am I doing today to increase profits?
Mm-hmm.
What am I doing today to increase? I think it was increase revenue was the other thing, revenue,
Okay.
profits, and what am I doing today to lower operational costs?
That's great.
So I
like
think
those.
that tracking that you're talking about
Mm-hmm.
helps lower the operational costs.
Correct.
But I have to say, a lot of people, like finances, people are they're like afraid, if that makes
Yeah.
sense, or
Mm-hmm.
they feel like they don't know how to do that, how to track
Yeah.
or how to keep track of things, or it's something that they just don't like to do.
I think it's a
So
combination.
yeah,
Yeah.
probably. So what do you
Yeah.
say to those people? I mean, what's like a good solution for some of those folks?
Well, some people I found out, I've known and trying to get with them, and they keep putting me off and blowing me off. Find out sometimes people are embarrassed because they're in a situation,
Right.
and so on the outside they look like them, their business, and have it all together, but really it's in a dire state, and they need the help, but they're afraid. So my thing is, don't be afraid to ask for help. Get with a professional and sit down with them and figure out ways. I tell people, personal business, I tell them, excuse the terminology that I'm going to use. I said, when I work with the clients, for me, Kathy, it's not a one night stand.
Oh,
It's
yep.
a long-term relationship.
Right.
So I want to work with you. If you may have small children, I want to see your children go to college, and you sending me pictures.
Yeah.
Hey Troy, my child is going to college. So I wanted to be the long term. So a lot of things when I come in and I look at individual business, you can't fix everything overnight. Some things you implement this one thing, and then you go to the next thing, and you go to the next thing, and so it's just really sitting down with someone that you trust and it's confidential, and help allow them to guide you through whatever you're trying to accomplish.
It's really interesting the way that you said all of that,
Mm-hmm.
because it reminds me of the way that I like to do sales, and I think that
Yeah.
sales should always be done.
Yeah.
It's
Yeah.
not for that one transaction.
Correct.
I
See,
mean,
that's
there
why
are
you and
things
I.
out there that it
That's why
can
you and
be
I
a
are
one
connected.
transaction,
Yeah.
right?
Right.
But it's really for the long term. So let me
Correct.
solve this problem, help you
Mm-hmm.
solve this problem. And then you move on to the next problem and
Yeah.
help them solve that problem as
Mm-hmm.
well. And sometimes people have to outsource, right?
True.
Or they have to they have to lean on the experts
Mm-hmm.
to do certain things. Like for
True.
me, I hate accounting. Like I love money,
Right.
but I hate accounting.
Yeah. Oh, I'm with you. I'm with you.
So that's something that I need to have somebody else do for me.
Right.
Just
Right.
because it's even just talking about it
Right.
just makes me kind of feel but there are people that love
it. Yes. Right.
and so let's let those people that love accounting do
Right.
the accounting, right?
True.
Yeah. Yeah. It's the same thing with you.
Yeah.
Some people don't like finance and figuring
Correct.
that all out.
True.
So
They don't. Yeah.
but you love it.
I do.
So
Yeah.
So why not let them, work with you or other people that are like you? And the same thing for me with sales. I love sales. I love negotiations. That's not for everybody,
True.
even though I think everyone can do it because everybody sells every day.
Right. We talked about
But
that.
it's not for everybody. So why
Yes.
not, outsource it or get some, help from some experts as well.
Agreed.
So let me ask you this question. If there was one thing that you would tell them to do today, to the people that are listening, what would you tell them to do?
And I say this all the time: pay yourself first. That would be the
Okay.
first thing I would start paying yourself first. And the reason being, I remember when I started implementing this years ago, I remember, Kathy, that I would pay myself first. But even though I was putting it away in a savings account, I still had to take the money out to still cover the expenses at home.
Yeah.
But it got ingrained in me. And so that was the key, that I kept doing it, even though I knew I had to use the money. But it's a mindset thing, and it's a part of my nature, part of my DNA. So pay yourself first would be the thing that I was, business or personal, pay yourself.
I love that. And it reminds me of, brick and mortar stores. At one time, I don't know if you see it very often anymore, but at one time you would see like a dollar bill framed.
Yeah.
And it was
True.
like the first dollar that they made.
Hey, yeah.
And so it's kind of like the same concept, which I love that. Pay yourself first. Even though nowadays most of all that's electronic, just like what you said, put it in your, pay yourself, put in the savings account, and then do what you need to do with it, with that money as well too. So that's great. So what makes you a rule breaker? Because I know you're a rule breaker.
Yeah, I'm a rule breaker because I believe in order to really excel, be best, you have to stand out. You have to do something different. You can't do what everybody else do. And things like sometimes on social media, I used to listen to the gurus, and they said, do this, don't do that. I said, and none of it never worked. I said, I'm breaking the rules. I'm just going to break the rule. I'm going to do different. They said use 3 to 5 hashtags. Well, I'm going to use 8 because I'm going to break the rule.
That's right.
And so there's a time, to break the rules. So just think about it. We probably wouldn't have some of the innovations and advancement if people hadn't break the rules, because we accepted the norm. And so for me, sometimes that is breaking the rule. Don't go with the status quo. What can I do different? What can I do to think outside the box to be different? And that's how I look at professional rule breaking.
Absolutely. So where can people find you?
Yes.
Because I know people after listening to this will be like, ooh, I want to hear some of those strategies.
Yes, they can find me. Probably the 2 places I think will be the best. They can go to my website, troyholt.com, TROYHOLT.com, and also on LinkedIn. I'm heavily on LinkedIn. I'm on all social media platforms, but those are the 2 I think. Well, LinkedIn is the heaviest I am on, but also my website, because my website has you can go and put your information in there, and then you can also get on my calendar at my website.
Okay, fantastic. Well, I want to thank you for being a guest here today. You brought up a lot of really great points. I know I'm going to be doing some math tonight.
Yes.
With that rule of 72.
72,
That's the first time I've ever heard of that. And for everybody that's out there listening, remember what he said: pay yourself first. That was his number 1 tip. Whether you're an entrepreneur or you work for someone, pay yourself first. And I absolutely love that. And just know that, when you take these steps to increase your financial literacy and do good things for yourself and for your family, you're creating a ripple effect.
Correct.
Because you're leaving a legacy for your family, and as well as for your business, the employees that you may have. And for those of you that listen to my podcast, I'm all about the ripple effect. Cast that stone in the water, cast all your great gifts that you have out there in the world, and see the ripple effect that you can create, and maybe, and I think you probably will, make a big difference in this world. So I want to thank my wonderful guest, Troy Holt, and his links will be in the show notes as well if you want to look him up and get some help with your finances. So thanks again, Troy.
You're welcome. Thank you, Kathy. Truly, thank you.